Hey, what's poppin', everybody? So today, basically, we're in 2021 right now, and I just want to say I really appreciate you all for watching my videos, for joining in, and leaving comments and stuff like that. And 2021, we're coming in even harder, and we're going all the way to the top. Okay, so for today, I definitely want to make a video about basically how to basically find a stock, right? And not have to rely on other people, right? So that's it right there. I want to do how to find stocks and not have to rely on others to give you stock information so you can analyze and do the research yourself, which will be better, which will be beneficial to you all other than relying on others' information. Even though other people information is good and there is a lot of stock market in the stock market. There's a lot of stocks in the stock market, and some people might be up on like what's going to be, you know, trading higher or what's going to be, like a decent stock later on. So yeah, so it's always good to listen, take advice from others as well and check it out. But it's also good for you to know how to do your own research and find stocks for yourself, right? So that's what this video is going to be primarily about. And you know um yeah, so so it can help you guys out in 2021, and you don't have to worry about like, how do I find this stock here or there, what stock should I even do options trading for, and all of that, right? So we're back, and we're on Morningstar, which is one of my favorite places to be to do some type of research. And what I want you guys to know when it comes to basically finding stocks is that there's 11 stock market sectors, right? And all the stocks in the stock market is within those 11 sectors, right? So you can basically choose ETF that covers that sector, go through the ETF and see undervalued stocks that maybe people are not really paying attention to. Yes, it's going to take some time. And yes, it's going to take you the diligent research, of course, right? So you can do that, and that will help you know what stock that's not really being looked at by others, or other stocks that that are in the market that you may not know about, right? So let's start with, we're going to look at let's see, XLY. We're going to look at XLY, which is consumer discrete select sector. And the reason I want you guys to take a look at it with me is because it's doing pretty well as of recently, and it's been doing well actually in the years before. We can take a look at performance. It's an ETF. We all know what the ETF is, right? A collection of stocks that basically tracks a specific sector. So we have consumer discretionary the sector. And as you can see, if you would have invested 10,000 at a particular point, which was 10 years ago, I believe, you would have 63,000 as of right now. So, yeah, so it's pretty good. But what I want you guys to do is not just to look at that. I mean, that's good. This is if you want to buy the actual ETF itself, but I'm doing this video is more of looking at individual stocks to buy. So let's go to the portfolio, right? And we can take a look at the portfolio, and we can see what they have in their portfolio. Okay, so here we are. It's not everything. They have 62 equities. So you're going to have to basically look and find a place that can give you all of it. But this is a good place to start, and we can go through any of them, like whichever one that you guys want to go through. But let's see. So I'll start with let's say something general. Let's see. Let's start with AutoZone. It's pretty interesting. I don't really hear much about AutoZone, right? So let's start with AutoZone, and let's do some research on AutoZone. So we're in a new tab. We're gonna go to we're gonna go to where are we gonna go? Yahoo Finance. Go there. And another one of my favorite places to be. So now that we're on Yahoo Finance, we can basically go to the search and put in what I just copied. If I paste it correctly. Okay, maybe my pasting skills are not the best. Okay. All right. So what was it? AutoZone and Zone AZO. Is that it? Is AutoZone AZO? Let's see. This is not going to tell me. Is AutoZone AZO? Whoa, AutoZone is that expensive? I did not know. Let's see. Let's get out of here. Let's get out of here. Go. And let's see. AutoZone. And let's see. Stock price. Yep, it's that expensive. I don't want to use this one. It's kind of a little bit expensive. So let's actually use Hilton Worldwide Inc. It's too expensive, and it's like I don't expect you guys to invest into that, being that the price is so high. So let's look at this instead. And it is I believe by just taking a look at it, it's should be like a hotel type of thing. So let's see. So yeah, so if you guys want to know what this company is, you can use Google and figure that out, right? So, but I'm gonna get into like the Yahoo Finance technicalities, right? I'm pretty sure it's like a hotel. So let's go here. So we're looking and we can see, let's take a look here. The first year target estimate was 103. It's surpassed that. So it's far out, it's far surpassed that number from and this means basically what the analyst has the price target for. And if you would have done the option for whenever they had this analyst like call right here or before, you would be up pretty well for that price, right? So it's always good when you do options to look at the analyst target estimation, so you can see what they believe it will be at, and do your place your expiration date for your options at a good far out time, right? So I always do like 2 years, maybe 2023, a year and a half, 2 years, I like to do that. The riskiest I've been was probably been like about like 8 months, 7 months that I've done one for. So I like to have mine pretty far, man, because it's better. The price increases better. It's just better overall. Less worry. As you can see, the PE ratio, it's not applicable. Okay. The EPS as of right now is in the negative, so they're not earning anything, right? And this is not to basically teach you guys everything. This is just what I look at. So earnings per share, they're not earning, they're in a negative, so that means they're not earning enough to cover their shares, right? So their earnings are not enough to cover their outstanding shares, and they're actually in a negative value. They don't even have a PE ratio, so the PE ratio will probably be some kind of weird number. Yeah, so we can see they do give dividends. They're giving out dividends February 27th. Earnings date is February 9th. Or I think for the next one. Or no, that's their earnings. I'm sorry, that's their earnings. I was looking at something else. So yeah, they're saying it's overvalued. It probably is. It is based upon this EPS. We can't really tell because of their PE ratio, but based upon the EPS, it probably is overvalued. I mean, and let's take a look here. This is another place I like to look at their earnings, right? So it shows you that as well. And we can look at it in the quarters. So there's 4 quarters, and we can look 2019, they beat first quarter 2020, they beat second quarter 2020, they missed, right? Third quarter 2020, they beat, and this one, the fourth quarter is coming out February 9th. So most people, when they do options or when they try to do day trading or any other type of thing, what is the other one called where you hold your trades for a little bit longer? But whatever, when they try to do stuff like that, they like to go at earnings time, right? So they bet like, oh, or like, I believe this stock is going to go up because of its earnings around the time they give out earnings. So some people will buy stocks before that earning time and just wait till it runs up and then sell, right? But doing that, you need a lot of money. I mean, how much can you like make off of $100 share price of the stock, right? If you're doing day trading, right? But if you do options and you buy it beforehand and you have a target in mind, yes, that's a little easier because it'll be cheaper. It's, you know, it's a possibility that you can make, you will make money, you know. But again, there's a possibility that you're going to lose money as well, especially if it does terrible during its earnings and your expiration isn't far out. And also the price target you have it at is too high, right? So, all right, so that's what I'll look at, guys. And another thing we can look at this right here, financial. So we can look at their revenue and again their earnings for the annual. So it looks like they've been going up in revenue every single year. So from 2016 to 2019, the revenue has been increasing, which is good. Earnings also has been doing well. It had its highest peak in 2017, but subsequently went down. You can actually click into this. And you can see quarterly as well. And it takes you to the financials chart, which I was going to get on anyway. And you can see quarterly. And yeah, so it didn't do too good 2020 in second quarter of 2020. And yeah, it's been obviously because hotels, hospitality, casino stocks, all those all those stocks, they've been doing bad, right? But you know, a lot of them are pulling back, so are getting back to a higher trading price. I'm pretty sure that Hilton is probably trading pretty high, I think, but I haven't. I'm gonna take a look and we're gonna see. Um, so compared to their target, yeah, it looks like it's trading high. So you know we're here, and what we can do, right, is we can actually go to, again, I'm not going to go through every single thing, right? This is letting you know just how you can do your own research. So we're going to go through financials, right? This tab right here, financials. You just want to click that for me. And then it'll take you to the financial page, and you start with income statement, balance sheet, and cash flow. These three are important. And every time you look at a stock, you got to look at these three, okay? So you can see their total revenue, and it's been decreasing. Well, it fluctuates, right? Total trading months means within the past 12 months, so kind of like 2020. As you can see, it's been fluctuating. Of course, 2020 was their worst. Revenues, cost of revenue is 5 billion. Gross profit is only 1 billion. And yeah, so that's what I look at. Let's see. Yeah, that's pretty much it for, well, let's see. I think there's something else. Yeah, that's pretty much it. That's all I really look at in here, just to help me see, but what's going on within that company itself. And as you can see, they did lose some money from 2019 till now, haven't been doing well in terms of revenue, which is totally understandable. But yeah, so balance sheet, take a look, and this is where you see you see their debt, you see their assets, and that's really important so you can know where that company stands, right? And as you can see, it's been increasing to 2019. They don't have 2020 yet, but that's fine. It looks good till up here, so it looks pretty good. Let me actually expand this. So yeah, you want to also take a look at, where's it at? I don't see you. Current liabilities, right? So current liabilities is important because it's telling you the company's current liabilities within a 12-month period that they have to pay back, right? So it's your liabilities they have within a 12-month period, right? So as you can see, it's about 2 billion, and their current asset it's 2 billion as well, right? So it as you can see, they have more liabilities, current liabilities, and they do have current asset, and that is a problem because the current asset is what they have on hand right now, currently within, again, 12-month period, and their current liability is what they have to pay back. So they're actually in debt, right? And we can actually even tell they're in debt by looking at we can actually look at stockholder equity, and that should be able to tell us that. Where is that at? Here it is. As you can see, yup. See, that means their current liabilities outweighs their current assets. You see that negative right here? They're in debt for 20. They came into the end of like 2019 in debt. So so that's why their earnings isn't looking too well either. But at least in the previous years, they weren't so deep in debt. They've actually been decreasing. I mean, in terms of that. So which is not good, right? But so yeah, stockholder equity is a good thing. So it lets you know just how much equity the stockholders have, based upon the company's current liabilities and their current asset, right? So as you can see, we're actually losing money in this company because they don't have anything currently. Yeah. So another thing that I like to take a look at is, let's see. Where is their long-term liabilities? I cannot see. Well, total liabilities, right? As you can see, it's again, it's more than their total asset, right? And that's not good. I don't like that, right? So yeah. Well, for 2019, it looks like 2019 they were in a rough patch with depth and stuff. So yeah, so I don't really like that, but yeah, so they're in debt. It's not good. And then you want to take a look at their retained earnings, I'm sorry. And basically this is what they retain after they pay off like dividends and stuff. And they don't have anything retained. Like their dividends are literally taking a good chunk of their money. So they don't have anything at all. And we can actually go to summary, and I think we can take a better look at something like that. Is it summary or is it, where do I see that at? Is it chart? Maybe it's not chart. No, I don't think it's chart. No. Okay, I'm sorry. I'm usually on the app, and this is a little different. Let's see. Maybe it's their profile. No, historic stats analyst. Okay, well, let's take a look here though. As you can see, this was the analyst price target was 103, and it's currently way past it. And it looks like they're saying it's a buy because they're talking about like a rotation out of tech to other stocks, right? Like hospitality and stuff like that. I can't find that, so let's just go back right now. But yeah, so we're going back to financials, and again, yeah. So that's just what the research you guys can do, man. I mean, you can see it. It's their numbers are in a negative. They're in debt. They're paying too much in terms of dividends. They're not retaining anything. So cash flow, and we just have to look at free cash flow. Well, at least they got some free cash flow. So, and it looks pretty good. It's not bad. So at least they got some free cash flow, and that's good. That just means what the company has left, basically in order to do things as well and stuff like, if the company was to liquidate, how much would they have per se? So that's good. And yeah, so that's all I pretty much do in terms of research. And then I look at the chart, and then I do my own. I know this video is long, right? Sorry about that, guys. But I look at the chart, and then basically I full screen it. Let's full screen it. And then let's change it from the date range from, let's see, year to date. And give me the year to date. Yeah, give me a daily. All right, awesome. Let's make this smaller. And there we go. And we can add basically my indicators, which I use as the moving average, of course. Keep it at 50. Let's save it. So we can already see something just by doing that. We can use the RSI indicator as well. And that's fine. The preset is fine for it. RSI indicator looking pretty high as well. Maybe we can let's keep this on first, and then we'll add the last one. So as you can see, moving average is basically we're on the 50-day moving average, is giving us the stock price within, like, the average stock price within 50 days. As you can see, the stock is higher than its average, and that means it's trading at a higher price, and you wouldn't want to buy it here. So as you can see, the rotation already started. out of tech, and people are going into consumer stuff and all that stuff. So you can see that clearly. It's way past it. It's way above it. Could have bought it here maybe around September or whatever. Could have, or October or something like that. You could have bought it here around August, September, and stuff like that. But yeah, but right now it's obviously above. It's 50-day moving average. I never buy anything above 50-day moving average because it will eventually go down, and then you will lose money, and you could have bought it at a cheaper price, right? So RSI again is going to 80. That means it's becoming overbought. A lot of people are buying it now because they want to cash in on the rotationary movement of capital. So they're buying a lot of it up, which makes sense. So it's at 66. Well, you would want to stay away from this, and just wait, right? Until it becomes oversold again, which it will eventually, right? And then we can add my other favorite indicator, which is the Bollinger Band. Boom. Keep it on what it is. As you can see, wow, yeah, it's touching its top Bollinger Band up here. It's touching that right there. See it? So whenever it touches it, that means it's at a high price, and you do not want to buy it there, right? And because as you see, when it touches it, it usually goes back down. It touches it, goes up. I mean, this one up for a while, but then it touches it, or it's out of it at this point, and it goes back down. Could have got it for a little bit cheaper here. Maybe not much cheaper, but a little bit, right? Then 104, 102, right? And then again, it goes back up, kind of touches it a little bit, and then comes back down right here to 101. Same thing, kind of tries to go back up, and you see how it works. This one touched it like pretty much touched it at that price target right here, which was 110, and then after that, touched it, right? You see how it's up at its top Bollinger Band, and it just slides down back to 103. Could have bought it at 103 again, right? And then look, and it goes back up. It's touching its Bollinger Band again at 111. Is it going to slide again? Well, history dictates that. Yeah, it probably will slide again. So you want to be careful and make sure this is what I usually do, man. Make sure that it's in that target. So as you can see, the Bollinger Band, whenever it touches its Bollinger Band, it drops back down, and you just want to make sure that when it's at its Bollinger Band, you do not want to buy. You want to buy when it's like going down, right? Like right here, you want to buy. Right here, you want to buy. Even right here, per se, but not really, because I like to have it touch its 50-day moving average at least. I usually like to do the 100-day moving average. So you can see this one was way below its 50. This would have been a good place to buy around October at $84. Yep. And then you would have made a decent amount, right? So yeah, so right now it's overbought. The options chain is probably pretty expensive too as well. In terms of percentage, it's probably been increasing. So I would stay away from it. It's it's not what I would do right now. So I would like to buy options whenever it's a red day, like it's red. Because green is okay, but red is, I like to do it because it's cheaper. The options at a cheaper price, and you can make more, right? So as you can see, this is obviously a little more expensive, right? And it's trading high. Then average. We can take a look at this chart and see the trajectory of this stock, and we can see it's actually it does pretty well, actually. Yeah, it's in an upwards direction. Just what happened right here took it out, because of the virus. So let's took it out to 55. Whoo, 55, man. Sheesh. Yeah, buy it at 55, man. You would have like 100% return, bro. All right, more than 100%. So look at that. It was trading at 112 before, and now it's trading at 111. Yeah, so it's gonna get there. So, yep. All right, guys. So that's how to basically stop relying on others and do your own research when it comes to the stock market in 2021, right? You don't need other people to tell you this, that, and the third. You can do it yourself. Yes, it may be good to hear about the new hot stock, but trust me, You don't always want to go based upon that. Do your own research. It takes time, but you'll ultimately you be happy that you know what's going on, right? So right now I wouldn't buy this, right? So there we go, guys. I hope this video helped you all a lot. Thank you all for viewing and watching, and Happy New Year. Peace out.